Create a cartoon-like video in complete English. Explain the dialogue below. Original TCJA provisions extended and amended. This section outlines how the 2017 Tax Cuts and Jobs Act TCJA provisions will be modified. Marginal tax brackets are proposed to be permanently extended. Standard deduction will be increased with a bonus of $1,000 for individuals, but $500 for heads of household, and $2,000 for married filers from 2025 to 2028. An additional deduction for those over 65 is also included, though phased out based on income levels between 2025 and 2029. Personal exemptions are permanently eliminated. SALT cap, state and local tax cap, is raised to $50,000 and phased out for incomes above $400,000. Pass-through entity state taxes are no longer deductible. Mortgage interest deduction is extended for $750,000 indebtedness and home equity loan restrictions. Miscellaneous itemized deductions remain permanently eliminated. Child tax credit increases to $2,500 and is indexed to inflation starting in 2029. Itemized deduction limitations are permanently eliminated, and deductions are reduced by $237 for top bracket households. Section 199A deduction for qualified business income is extended and increased to 23% with a modified phase-out. Alternative minimum tax, AMT exemptions, and phase-out thresholds are permanently extended. Gift and estate tax threshold is increased to $15 million per individual and $30 million per couple in 2026. Qualified Opportunity Funds, QOFs, receive an extension for new deferral periods from 2027 to 2033, with continued step-up benefits and exclusions for gains held over 10 years. New provisions proposed. This section introduces new deductions and credits. No tax on tips allows a below-the-line deduction for tip income earned by non-highly compensated workers in traditionally tipped occupations. Applies to both itemizers and non-itemizers. No tax on overtime provides a deduction for overtime income for eligible workers. Auto loan interest deduction allows a $10,000 deduction for auto loan interest from 2025-2028 with income-based phase-outs and U.S. vehicle restrictions. 529 plan qualified expenses are expanded to include K-12 materials and certain post-secondary credentials. HSA reforms include increased contribution limits, expanded eligibility, e.g. Medicare Part A enrollees and spouses, fitness-related expenses, and rollovers from FSAs and HRAs. MAGA. Accounts are introduced as early access investment accounts for children with specific tax advantages and contribution rules. Clean energy credits like vehicle, refueling, and home improvement credits are scheduled to sunset after 2025. This overview serves as a roadmap for taxpayers, financial planners, and lawmakers, highlighting significant structural changes to tax deductions, credits, and thresholds proposed for 2025.